Alright, y'all, welcome back to the rodeo. It is Monday, March 7th, about 7 a.m. Eastern, and I gotta hit the road here in a bit. But there are a few things we gotta take a look at before we get going this week. Take a look here at the futures, which are down at the moment. S&P 500 down about 1%. The QQQ futures down about 1%. At one point, they were down about 2%. Russell 2000 futures down about 1.5%, and the Dow Jones futures are down about 1%. So here's what you want to focus on today. In my opinion, S&P is under 4,300 or 430 if you're looking at the SPY. I think we're going to continue to trend lower. So 4,300 is pretty key support here. And if I was bullish on the market, which I'm not, but if I was bullish, I wouldn't want to wake up and see the S&P breaking that level. 4,300 is your key support back in September, October. It's your key support in January. And pretty much all of last week, we're just ping-ponging here in a $100 range with 4,300 being support. And we're trying to break it here this morning. So that's my thinking. Under 4,300, you look for potentially a flush back down towards these recent lows. Back above 4,300, and it might be more of the chop fest. We're not going to get that good 5-6 day rally to the upside if we can't get back above the 21. So pretty much you're looking at a continued chop fest here. If we're still stuck between 4,300 and 44, if we're back above the 21, then you might see these markets grind higher. But under 4,300, I think it could all start to slip. And we still got the bearish weekly squeeze. We've got the bearish 3-day squeeze, the 2-day. Of course, you got the daily squeeze, and you got the 4-hour. All right, the 4-hour squeeze here, which under 4,300 I think has a potential to really start to unwind. So there's a key level for the index. And this pretty much, y'all, is going to set the tone for everything. So if you're short this morning, you want to see the S&Ps under 4,300, and ideally we start to roll over. If you're a bullish right now, you quickly want to see the market take back that level of support. So I am going into the week with a few short positions. We got a short on IWM. Would like to catch one more flush back down towards 190, 185. So we got that position. What else? Got some Apple shorts here in the options room, which we're looking for a move to like 155, 150. I have got an Amazon short, and I think Amazon's a good short here. You've got the rejection at the 21, bearish daily squeeze. But what I like here is that weekly chart. Last week was week number 1 of that squeeze finally firing to the downside. So I think you could have another 4 or 5, maybe 6 weeks of momentum, which I think could take it down towards 2,500. Right around your weekly 200 SMA. So we got a short on Amazon, short on Apple, IWM. We shorted Snapchat last week. Looking to take profits on a bit more downside. And we took profits on an Uber short last week. It's the second time we shorted this recently. So in my opinion, y'all, the structure here hasn't changed. You got the short squeeze last week, pretty good bounce, but we haven't shifted. We're not back above daily moving averages, which obviously means we're nowhere near being back above the weekly moving averages. And as long as you got these weekly squeezes, I think you got more downside. But for today, tomorrow, the rest of the week, 4,300 is pretty big stuff here. I think pretty quickly we could be heading towards 4,200, 4,100 if we can't scratch and claw our way back above that key level of support. So focus on that this week. And then my suggestion is you're looking to short bounces. So whether it be in something like an Uber, get the bounce, you short it. Whether it be something like Amazon. As long as the structure is bearish, we basically want to work the same game plan that we would work in a bullish market. So if you look at the inverse chart of Amazon, this is all pretty bullish here. You got stacked DMAs, you got a pretty squeeze. All we would want to do is basically buy every dip to the 21 EMA based on the structure. So based on the current structure of Amazon, and really pretty much everything else here except like energy, oil, we want to continue to short these bounces into these moving averages. So I think Amazon is a good short. If you do get a bounce here on the market, the easiest short is just shorting the indexes. But I think as you run your scans here, shorting the rips, in my opinion, is the easiest trade right now. Could all change any day, but that's the game plan I'm working. So that's my suggestion. Run your scans. Find things that have, negatively stacked EMAs. A bunch of squeezes under the 21 EMAs. Negative histograms. That kind of structure typically is what's going to give you a good short. And since January, the short side has been good to us here. So when I look at all the trades I've taken, we already had one short on the IWM. We caught that back there and took some nice profits. We shorted Comcast twice. Catching that flush, we had a short on Nike. That was a nice trade. We hit Uber twice. Now we got some Snapchat. I think the only losing trade at the moment in terms of the short side has been HCA. And I still like the entry. That one didn't work. But it's all been pretty smooth. Right? Look for a bounce into a moving average. Look for a downtrend. Look for bearish momentum. Keep on rinsing and repeating here until the structure changes. But for today, I think there's no more important level than 4,300. And we shall see how it all unfolds. But if I was bullish, this is not what I want to see. So focus good today. Wish you all the best of luck. If you haven't already, go on ahead and subscribe. My apologies for a bit of a shorter video today. But quite frankly, I think this is all that matters. So if you're trying to buy the dip anywhere, you pretty much want your S&Ps back above 4,300. If you're short, S&Ps under 4,300 might deliver the goods here this week. So best of luck, y'all. I gotta hit the road, but I will talk to you soon.